You know, when I first started trading, I thought the market was chaos, pure, unfiltered chaos. I'd sit there watching the tape, watching prices jump up and down like a wild horse nobody could tame, and I'd think to myself, there's got to be a pattern here. There's got to be a way to read this. And I was right. But I was also wrong about something fundamental. I thought the chaos was the problem. It wasn't. The chaos was just noise. The real problem was that I was listening to the noise instead of the music underneath it. Let me tell you something that took me years to understand, something that cost me fortunes before I finally got it through my thick skull. The market doesn't care about your time frame. It doesn't care if you're trading the 1-minute chart or the monthly chart. But here's what matters. The market has a memory, and that memory lives in the higher time frames. I've talked about this extensively in my other video, Why Higher Time Frame Always Wins, weekly, daily, and H4. And if you haven't watched that yet, pause this right now and go watch it. I'm serious. Everything I'm about to tell you builds on that foundation. You can find it linked in the description below. Now, intraday trading, the fast game, the game where fortunes are made before lunch and lost before dinner. Most people think intraday trading is about being quick, being clever, being faster than the next guy. They're wrong. Intraday trading is about being right about one thing and one thing only: bias. What's the market trying to do today? Not what you want it to do, not what some guru on the internet told you it would do. What is it actually doing? Before I even look at a chart in the morning, before I even think about placing a trade, I ask myself 3 questions. First, what did the higher time frames tell me yesterday? Second, what happened overnight while I was sleeping? And third, what's the story the market is trying to tell me right now? These 3 questions form what I call your bias, and your bias is everything. Without bias, you're just gambling. With bias, you're trading with the house. Let me paint you a picture. It's 1915, and I'm sitting in my office watching the ticker tape come through. The market's been in an uptrend for weeks. The daily chart, the weekly chart, they're all pointing up. That's my higher time frame context. That's my foundation. Now, overnight, there's been some news. Maybe it's good, maybe it's bad, but the market's reacting. I watch how it reacts in the first hour. Is it respecting that uptrend? Is it trying to break it? That's my bias forming. If the higher time frames say up, and the market's reacting to news but still holding support, my bias is bullish. I'm only looking for buy opportunities, period. You see, most traders lose money intraday because they don't have a bias. They see a candle go up, they buy. They see a candle go down, they sell. They're reacting to every little wiggle and jiggle, and the market just chops them to pieces. But when you have a bias, you have a filter. You have a lens through which you view every price movement. And that lens is based on something real, the higher time frame structure. I want you to comment below right now and tell me, do you trade with a bias, or do you just react to price? Be honest with yourself. This is where most people fail, and they don't even know it. Also, while you're down there, check out the other videos on this channel. Every single one of them is designed to build your understanding of how the market really works. This isn't entertainment. This is education. Treat it like your trading education depends on it, because it does. Now, once you've got your bias, you need structure. Structure is the roadmap. Bias tells you which direction you're going. Structure tells you where the roads are. And here's the thing about structure. It's not complicated. The market moves in waves. It always has. It always will. Impulse, correction, impulse, correction. Like breathing. In and out, up and down. Your job as an intraday trader isn't to predict where the market will be next week. Your job is to identify where the market is in its current wave and position yourself accordingly. Think about it like this. If the higher time frame is trending up, the market's going to make a series of higher highs and higher lows on your intraday chart. That's structure. That's your roadmap. When the market pulls back to a higher low, that's not a reason to panic. That's not a reversal. That's structure giving you an opportunity. That's the market saying, hey, Jesse, you want in? Here's your spot. But you've got to know what you're looking for. I can't tell you how many times I've seen traders get shaken out of perfectly good positions because they didn't understand structure. The market pulls back, they think it's over, they sell, and then it rockets back up without them. Why? Because they were trading without a map. They didn't know where they were supposed to hold, where they were supposed to add, where they were supposed to exit. They were just hoping and praying, and hope is not a strategy. Let me give you a concrete example. Let's say the daily chart shows a strong uptrend. Your bias is bullish. You're only looking to buy. Now, you drop down to the 15-minute chart, and you see the market's been making higher highs and higher lows all morning. That's your structure. That's your confirmation. The market pulls back to the previous high, which is now acting as support. That's a structural level. That's where you look for your entry. Not before, not after, right there. And here's where it gets beautiful. When you combine bias with structure, you're not guessing anymore. You're not hoping. You're waiting for the market to come to you. You're like a hunter in a blind, waiting for the deer to walk into range. You've done your homework. You know where the deer walks. You know what time it comes by. All you have to do is wait and execute. That's the difference between a professional and a gambler. Now, I mentioned earlier that you should check out my new ebook, Thinking Like Jesse Livermore, Mastering the Market with Discipline, Patience, and Risk. You can find the link in the description below. That book goes deep into the psychological side of all this, because let me tell you, knowing what to do and actually doing it are two very different things. The market will test you. It will make you doubt your bias. It will make you question your structure. And if you don't have the mental discipline to stick to your plan, you'll get eaten alive. So we've established bias. We've identified structure. Now comes the part where most traders fall apart. Execution. And I'm going to tell you something that might surprise you. Execution isn't about being fast. It's about being patient. It's about waiting for your setup to develop completely before you pull the trigger. See, the amateur trader thinks execution is the hard part. They think it's about having quick reflexes, about getting in before the move happens. But the professional knows better. The professional knows that if you've done your homework, if your bias is clear and your structure is sound, the execution is the easiest part. Let me tell you what execution really is. Execution is the moment where your preparation meets opportunity. That's it. It's not complicated. You've identified your bias. The market wants to go up. You've identified your structure. The market is making higher lows, and you're waiting for a pullback to a key level. Now, you wait for price to come to that level, and you watch how it reacts. Does it bounce? Does it show strength? If yes, you execute. If no, you wait. Simple as that. But here's where discipline comes in, and this is critical. You don't execute just because you're bored. You don't execute just because you've been watching the screen for 2 hours and you feel like you need to do something. You execute when your edge is present. When all three pieces, bias, structure, and confirmation, line up perfectly, that's when you strike. Not before, not after. Exactly then. I remember one particular trade I made back in the day. The market had been trending up beautifully on the daily chart. My bias was clear. Bullish. The intraday structure was perfect. Higher highs, higher lows, textbook stuff. I'd identified my level, a previous high that had been broken and was now support. The market pulled back to that level, and I watched. I watched the tape. I watched how the orders were coming in, and I saw it. I saw the strength. The market wasn't going to break that level. It was going to bounce. So I executed. I bought. And within 30 minutes, I was up significantly. Why? Because I didn't guess. I didn't hope. I executed when my edge was present. Now, let me talk about something that most people don't want to hear. Stops. If you're not using stops, you're not a trader, you're a gambler. And I don't care how good your bias is. I don't care how perfect your structure is. The market can and will do things you don't expect. That's why you need a line in the sand. That's why you need a point where you say, if the market goes here, I was wrong and I'm getting out. Your stop should be based on structure, not on how much money you want to risk. Let me say that again because it's important. Your stop should be based on structure, not on how much money you want to risk. If the market breaks a structural level, your bias is invalidated. Your trade is over. Get out. Don't sit there hoping it'll come back. Don't average down. Don't tell yourself a story about why you're still right. The market is telling you you're wrong. Listen to it. Here's how I think about stops. If I'm buying at a higher low, my stop goes just below that low. Why? Because if the market breaks below that low, it's no longer making higher lows. The structure is broken. My bias might still be intact on the higher time frame, but this particular trade is done. I take my small loss, I wait for the next setup, and I move on. This is what I talk about in depth in my other ebook, The Livermore Journal, a 90-day trading psychology workbook. It's a practical, day-by-day guide to building the mental discipline to actually follow your rules. You can find the link in the description. Trust me, if you struggle with taking losses or sticking to your plan, that workbook will change your trading life. Now, let's talk about targets. If your stop is based on structure, so should your target. Where's the next structural resistance? Where's the next area where the market might pause or reverse? That's your target. I'm not a fan of arbitrary profit targets like, I want to make $500 today or I want to catch a 2% move. Those numbers are meaningless. The market doesn't care about your financial goals. The market has its own structure, its own rhythm, and your targets should respect that. For example, if I'm buying at a higher low, I'm targeting the previous high. That's the logical place for the market to go. If it breaks through that high, great. I might hold for the next level, but I'm not getting greedy. I'm not holding just because I feel like the market should go higher. I'm holding because the structure tells me there's more upside. And the moment the structure changes, the moment the market starts making lower highs or breaking support, I'm out. I take my profit, and I wait for the next opportunity. This is what I mean when I say intraday trading is simple. It's not easy, but it's simple. Bias tells you direction, structure tells you where, execution tells you when, and your risk management tells you how much. These four pieces work together like a machine. When they're all aligned, you have an edge. When even one of them is missing, you're just guessing. Let me give you another example to drive this home. Let's say the higher time frame is bullish. You've got your bias. The intraday chart shows a clean uptrend with higher highs and higher lows. You've got your structure. The market pulls back to a key support level and starts to bounce. You've got your confirmation. You enter the trade with a stop just below that support. You've got your risk defined. Your target is the previous high. You've got your reward defined. Now you wait. You let the trade work. You don't fiddle with it. You don't second guess it. You trust your process. And if you're right, the market goes to your target and you take your profit. If you're wrong, the market hits your stop and you take your loss. Either way, you've traded like a professional. You've executed your edge. And over time, if your edge is real, you'll make money. It's that simple. But here's the thing most people don't understand. You're not going to win every trade. You're not even going to win most trades. If you can win 50% of your trades and make more when you win than you lose when you lose, you'll make a fortune. That's the game. That's what the market is offering you. But you've got to have the discipline to play it correctly. You've got to have the patience to wait for your setups. And you've got to have the courage to execute when your edge is present and the humility to get out when you're wrong. I've got more videos on this channel that break down specific setups, specific strategies, specific examples of how to apply these principles in real market conditions. Go watch them. Don't just watch this video and think you've got it all figured out. Trading is a skill, and like any skill, it requires practice and repetition. Every video you watch, every concept you study, is adding another tool to your toolbox. Make sure you check the description for links to those videos, and while you're there, grab those ebooks I mentioned. They're designed to work together with these videos to give you a complete education. Now, let's bring this all together because this is where the magic happens. This is where everything you've learned, everything you've studied, everything you've practiced comes together into one cohesive approach that actually makes money in the real world. You see, intraday trading isn't about being smarter than everyone else. It's not about having some secret indicator or some magic formula. It's about understanding three simple things better than everyone else: bias, structure, and execution. Your bias comes from the higher time frames. I can't stress this enough. If you're not checking the weekly, the daily, the 4-hour chart before you even think about trading the 15-minute or the 5-minute, you're trading blind. You're ignoring the context that matters most. The higher time frames are where the big money lives. They're where the institutions are positioned. They're where the real trend is. And when you align your intraday trades with that higher time frame bias, you're trading with the current, not against it. This is exactly what I cover in my video, Why Higher Time Frame Always Wins, weekly, daily, and H4. If you skipped it earlier, don't skip it now. Watch it after this video. It'll change how you see the market forever. Your structure comes from understanding that the market moves in waves. It's not random, it's not chaos, it's rhythm, it's pattern. And once you train your eye to see those patterns, once you understand what a higher high and a higher low actually mean, once you can spot support and resistance in real time, you'll never look at a chart the same way again. You'll see opportunities where others see confusion. You'll see clarity where others see noise. And your execution? Well, that's where the rubber meets the road. That's where you prove to yourself that you have what it takes. Because let me tell you, knowing what to do and actually doing it are worlds apart. The market will test you. It'll give you setups that look perfect but fail. It'll give you setups that look terrible but work. And your job isn't to predict which is which. Your job is to follow your process, take your trades when your edge is present, manage your risk, and let the probabilities play out over time. I've been doing this for longer than most people have been alive, and I can tell you this with absolute certainty. The traders who make it, the ones who actually build wealth from this game, aren't the ones with the highest IQ or the fastest reflexes or the most expensive software. They're the ones with discipline. They're the ones who can sit on their hands when there's no setup. They're the ones who can take a loss without blowing up their account or their psychology. They're the ones who understand that this is a marathon, not a sprint. Think about what we've covered here. You start your day by checking the higher time frames. What's the trend? What's the bias? Where are the key levels? You drop down to your intraday time frame and you watch the structure develop. Are we making higher highs and higher lows? Are we respecting support? Are we breaking resistance? You wait for price to come to a key structural level. You watch how it reacts. And when you get confirmation, when you see strength at support or weakness at resistance, you execute. You enter with a clear stop, a clear target, and a clear plan, and then you manage the trade according to that plan. This isn't complicated, but it requires something most people don't have: the discipline to wait, the patience to let your edge appear, the courage to execute when it does, and the humility to admit when you're wrong. If you can do those 4 things, if you can master those 4 elements, you'll make more money than you ever thought possible. But if you can't, if you're constantly chasing, constantly guessing, constantly hoping, the market will take everything you have and leave you with nothing but lessons you paid way too much to learn. That's why I wrote Thinking Like Jesse Livermore, Mastering the Market with Discipline, Patience, and Risk. Because I've seen it all. I've made every mistake you can make, and I've learned from every single one of them. That book distills decades of experience into principles you can apply today, right now, to your trading. And the Livermore Journal, a 90-day trading psychology workbook, gives you the daily exercises, the daily reflections, the daily practices that will turn those principles into habits. You can find both of them linked in the description below. They're not just books, they're tools. Use them. Now, I want to challenge you. I want you to take what you've learned in this video and put it into practice. Don't just watch this and move on. Go back and watch the other videos on this channel. Watch Why Higher Time Frame Always Wins Again. Watch the videos on risk management, on psychology, on specific setups. Each one builds on the others. Each one adds a piece to the puzzle. And when you put them all together, you'll have a complete system, a complete approach, a complete edge. Comment below and tell me, what's your biggest challenge in intraday trading? Is it finding your bias? Is it identifying structure? Is it having the discipline to execute? Let me know. Let's build a community here of serious traders who are committed to mastering this craft. Because that's what this is. It's a craft. It's not gambling. It's not luck. It's a skill that can be learned, practiced, and mastered. And here's the thing I want you to understand, really understand, deep in your bones. You're capable of this. You're capable of reading the market. You're capable of making money. You're capable of building the kind of wealth and freedom that trading can provide. But only if you approach it the right way. Only if you treat it with the respect it deserves. Only if you commit to doing the work, learning the principles, and following your process day after day after day. The market doesn't care about your feelings. It doesn't care about your bills or your dreams or your fears. But it will reward you if you learn to read it correctly. It will reward you if you have the discipline to wait for your edge. It will reward you if you have the courage to execute when the time is right, and the wisdom to step aside when it's not. That's the game. That's what I've been teaching you. That's what every video on this channel is about. So here's what I want you to do right now. First, make sure you've subscribed to this channel and turned on notifications so you don't miss any new videos. Second, go watch Why Higher Time Frame Always Wins if you haven't already. Third, grab those ebooks from the description. And fourth, start applying this. Start with one thing. Maybe it's checking the higher time frames before you trade. Maybe it's identifying one clear structural level each day. Maybe it's placing just one trade with a clear plan and sticking to it. Start small, build your confidence, and grow from there. You're not alone in this. Every trader who's ever made it, every trader who's ever built real wealth from the markets, started exactly where you are right now. They had the same doubts, the same fears, the same challenges, but they pushed through, they learned, they practiced, they mastered their craft, and now it's your turn. The market is waiting, your edge is waiting. All you have to do is claim it. All you have to do is commit to the process, trust your preparation, and execute with discipline. This is your moment. This is your opportunity. The question is, are you going to take it? Are you going to do the work? Are you going to master bias, structure, and execution? Because if you do, if you really commit to this, there's nothing that can stop you. The market will open up to you in ways you can't even imagine right now. And years from now, you'll look back at this moment, at this video, and you'll remember this as the turning point. This is where it all changed. This is where you became a real trader. Now go watch those other videos, go get those ebooks, go put this into practice. And I'll see you in the next video. Until then, trade well, trade smart, and always, always trade with discipline.